answering your questions about retirement. It's Money Talk with Michael Eastham.
My only income is Social Security for my husband and me, and it's fine to cover our bills. We're both 67 and retired last year. We have $400,000 in IRA accounts, but don't need it and are afraid of taxes. Right now, we don't have to file, and our Social Security is $50,000. What options do we have to reduce taxes later?
Great. Another one of those tax questions. We love those at Fellowship Financial for sure. Well, it's good to hear that you're thinking ahead. You're trying to plan ahead because you're absolutely right. If your Social Security is $50,000 and that's the only source of your income, well, you're right. You don't have to file your income taxes because you're not going to be paying. However, when you start to take money out of your 401k, your $400,000 IRA account, based on today's life expectancy tables from the IRS, your IRA, your required minimum distribution, or RMD, at age 73 is going to be around $16,000. So what do? Well, guess what? You've got a great opportunity for the next 6 years or so to possibly take some of the money out of your 401k or that IRA account tax-free. That's right, I said tax-free. You've got a $15,000 or $16,000 standard deduction. If you're married, then you have $25,000 or $26,000 standard deduction. That means that you can take some of that money out of your IRA. Of course, there's a little bit of a complicated equation that we have to go through to jump through some hoops. However, you could take some money, maybe $10,000 to $20,000 out of your IRA and not pay a dime in taxes. Wouldn't that be great over the next 7 years? You take $10,000 out each year, that's $70,000. Now, is that all of your IRA? No, it's not. But it certainly could go a long way at reducing the amount of your required minimum distribution when you do hit 73. Not only that, but if you take that money that you rolled out tax-free and you're able to put it into a Roth account doing a partial Roth conversion, well, guess what? Done the right way, that money's never going to be taxed by you or your beneficiaries. So that can certainly be a great tool. And you got an extra year now, right? It used to be 72 that your RMDs started. Now it's 73. So what I'd encourage you to do is to you can reach out to our office and you can request a recorded version of my required minimum distribution webinar, or you can just check out our events calendar on the website, fellowshipfinancial.com, and click on the calendar, the live events, and see when our upcoming workshop on RMDs is, or an upcoming webinar. That's a great way to get additional information, and of course, we're always available to chat with you to help you make an informed decision about your next steps. Thank you for that question.
If you've got a financial question you'd like to have answered, click on the link below to submit your question. You may hear your answer on an upcoming edition of Money Talk.